My whole life is a series of accidents, and I tend to think that's a good way for life to evolve. You can't have a plan because the world is too unsettled.
Hello and welcome to the second episode of the Drayton Discourse, brought to you by the Economics Society here at UCL. My name is Olaf.
And I am Yash, and we are honored to be joined today by the Chief Economics Commentator of the Financial Times, Martin Wolf. Well, though he requires little introduction, Mr. Wolf is one of the world's top financial journalists. His columns inspire, guide, and inform businessmen, policymakers, and financial leaders worldwide. In 2000, he was awarded the CBE, which is the Commander of the British Empire, for his distinguished services to financial journalism.
Mr. Wolf has authored several books, such as The Shift and Shocks and Why Globalization Works. He has had a career in the World Bank and worked for the Independent Commission on Banking as well. So without further ado, let's get straight to the interview.
Okay, so Mr. Wolf, thank you so much for joining us for the episode of the Drayton Discourse. For the first question, you have extensively and brilliantly written about globalization in your books, Why Globalization Works and The Shifts and Shocks. Now, a lot of people are concerned about how the pandemic will impact both the economic and cultural aspects of globalization. What are your thoughts on that?
Well, this is a huge and very important question. So, first of all, where we are now, obviously, is that the world economy has in pretty well all respects been massively disrupted by the pandemic over the last few months. World trade has collapsed, has fallen. We don't know exact details yet, but it's certainly falling as fast as it did in the global financial crisis and possibly faster. That's trading goods. Most of that is because economies have closed down. But part of it is, I think a relatively small part of it is actual protection. People stopping goods going across the frontier, more usually actually export controls for a change rather than import controls. And these are goods which are directly related to managing the pandemic, like ventilators or masks, things like that. But a far bigger thing is the collapse in GDP. And one should say, on the other hand, that probably communication, if you can think of it as globalization in the form that we're now engaged in, virtual communication, is probably booming. In fact, we're clear it's booming because it's a substitute for the other, or a partial substitute for the other thing that has collapsed, which is travel. Yep. Obviously, a very important part of the global economy was people moving for business, moving for tourism, which is a very big industry, and all that stopped or very massively disrupted. So globalization in those respects are severely disrupted. Beyond that, there are a couple of other very important respects. Remittances are a very important global flow. And of course, they've been very badly disrupted because people lost jobs and income, and therefore they can't send money back. And that's very important for a lot of developing countries. There was a very substantial disruption in the early month or two of capital flows too. There was massive capital flight from emerging and developing countries, from risk more broadly. Yeah. That seems to have substantially reversed in the last month or so, largely because the action of central banks, particularly the Fed, has restored confidence. But we can say that globalization has clearly been massively disrupted and transformed in these complicated way by the crisis itself. And then, of course, the question is, will this last? Is this an enduring shock? And here, I think, we have to consider essentially two aspects. First, there was a lot of pressure on globalization in relationship to the flow of goods before the crisis. There was a lot of protectionism, a lot of it focused on the US. But in fact, the globalization of goods as measured by the rate of growth of trading goods relative to the rate of growth of world output had already slowed after the global financial crisis. That seems to have been a high point. And since Donald Trump was elected, trade flows have been further disrupted by protection, particularly, though not exclusively, focused on US-China relations. This hadn't really affected capital flows so much, but again, some aspects of capital flows, particularly bank credit, which was very important in the past, never went back to where it was before the financial crisis. So again, we've seen a longer term shift in the structure of capital flows from bank credit to bonds and other forms of portfolio flow, particularly portfolio equity. Travel and tourism were doing very well. Now, the question is what lies ahead after the pandemic is over. Well, there are 2 points about that. This is the sort of second sub-point. One, we have no idea when or if it will be over. It is perfectly possible that we will be living with this virus indefinitely. It is also possible they will find a vaccine or a cure and we can stop thinking about it. But of course, as long as it's around, it will affect travel to some extent. It will affect the willingness of people to get into planes. It will affect the willingness of people to be tourists, particularly older people who are a very big part of the market. So it won't go away. That's the important point. Second, I think the shift to the virtual that we've seen now is probably permanent, or to some degree. That is to say, it's accelerated a progress that was going to happen anyway. We've suddenly been catapulted forward, maybe 4 or 5 years, in terms of communicating and operating our businesses online in this way. And I suspect that will mean probably at the margin, business travel anyway will not go back to where it was before, because it just doesn't make so much sense to get on a plane and fly 12 hours when you can do this so easily. Now, I'm not saying it will go completely, but that will be permanent, obviously. And then finally, I think it's the focus of it. We were seeing again, it followed from what I said about US and China, a sort of disintegration of the multilateral trading system to some degree before the crisis. It's pretty clear that relations between the US and China, also the EU and China, have worsened structurally in recent years, and the pandemic has not helped at all. And already lots of businesses, particularly American, but also I think European, were saying to themselves, it doesn't really make sense to have these very long supply chains. They're risky and they're exposed to political risk because of the trade relations. And anyway, the economics of operating in China aren't as good as they were because the labor costs have risen, and Vietnam is quite a nice place to work, but it's not as big. So I think there was the robotics. All this pushed supply chains back home to some degree. I think what's going on now, particularly on the political side, will reinforce that. And lots of businesses in the Western businesses are going to say, look, it's risky for us to operate in China. There are political risks. There are actually risks in the way the Chinese behave. They might use us as hostages, which has happened with some Canadian businesses. Our governments don't like it. The economics aren't as favorable because the wage costs are so high. The Chinese, in any case, don't rely as much on trade and aren't so keen on it anyway, and are clearly more nationalist. So basically, let's accept it. We're not going to go back to where we were before. Right. So this is a long and complex answer, but I think what I think now is I don't believe at the moment it's going to end it all by any means. It's not going to be like the 30s at all, but I think this will be seen in retrospect as another turn of the screw, and a big turn of the screw, maybe several turns of the screw, which was reducing the impulse to globalization, at least as far as movement of people for business and movement of goods is concerned. Movement, interaction virtually like this, I suspect that's going to boom.
So Europe's economic stimulus package and a long-term plan for economic recovery, then the next generation EU, worth 750 billion euros, was recently announced by the European Commission. And what, in your opinion, are its strengths and weaknesses?
Well, perhaps the most obvious weakness is that it hasn't been agreed. So it doesn't actually yet exist. And it's pretty clear from the discussions going on that it's going to be a long, hard battle. It's going to be a hard battle to get this package at this scale agreed. There's going to be a big battle over where the money is going to be spent. It's going to be a big question of where does it go? What is it used for? And then the third big battle is how it's going to be financed. Will the EU be given, the Commission be given the permanent revenue streams that it aspires to? As you know, it wants to have independent revenue streams, things like carbon taxes, for example, maybe digital taxes, which would allow it to borrow on its own account without relying on consent from all the members at all times. Of course, that's another big question. How would you agree to use those measures? Because at the moment, all fiscal decisions require unanimity. They aren't subject to qualified majority voting. So all this is uncertain, very uncertain. If it were agreed, they're thinking of 750 billion, as I understand it, to be spent over 3 or 4 years. So that, let's say it's 3 years, that's 250 billion euros a year. This is a substantial sum for sure, but it's quite a small fraction of the GDP of the EU as a whole. This is EU-wide, even without the UK in it. It's not actually a huge percentage. So I don't regard it as transformative financially. Helpful, but not transformative. It wouldn't change the fact that, for example, fiscal capacity varies dramatically across the EU, and countries with very strong fiscal positions like Germany can spend vastly more than Italy, for example, and that wouldn't really change however the money is allocated, so that reinforcement of divergence and inequality will continue. And of course, there's going to be a huge question about how much of the money should go to the poorer states in the East, which has nothing to do directly with the crisis, as most EU money goes, of course, to the poorer countries. So that's an important question here. But I don't regard it as structurally significant in the sense it will transform anything now. But it will, if it's agreed, be a very strong statement of solidarity and a strong statement of capacity to act and commitment, particularly by the German government, to make financial contributions, which already goes along with the remarkable fiscal action of Germany. So it indicates a very different Germany, which is important. And it might indicate that there's also basically very strong support for the ECB to act, which is the most important actor in the current situation. Obviously, their resources are essentially limitless, particularly after the German Constitutional Court's ruling, which sort of shocked people's confidence in the ability of the ECB to act. Now, this isn't directly related to that, but still, these are political questions. And if the governments indicate such a profound commitment to act together, I think it will make the German court's job of sort of really reeling it back more difficult. So not transformative, symbolically very important, some potential real significance, but still, the EU has lots of problems in coping with the crisis. Some of the most hard-hit countries in the world are in the EU.
Thank you so much for that. And now moving the discussion from the European Union and bringing it to Britain and tying in Brexit along with the COVID-19 pandemic. According to you, how will a no-deal Brexit transition combined with the global trade shocks caused by the pandemic affect the British economy?
Well, I think the obvious answer is that it will have a long-term structural negative effect. I don't think there's any serious doubt about that.
Yeah.
We just don't know how big it is.
Mm.
But given that we are now in this colossal recession, the last one assumes that the quarter we're now ending will probably be the nadir of the crisis economically. Unless there's a huge second wave or third wave. I mean, something with death rates stratospheric. And I have no comments, as I'm not an epidemiologist, on how likely that is. But most people seem to believe that it's not terribly likely, so it's certainly not inconceivable. But if you leave that aside, then this should be the worst. Okay. So we should be recovering. Though I think the general estimate is it's quite unlikely that we'll be back to 2019 levels before 2022. So there will be 3 years gone. So in that context, then what I would tend to think is that the impact of Brexit, whether it's a very weak free trade agreement or no deal, will be basically to slow the recovery, will be weaker than it would otherwise be. And the weakness will go on. The crisis we're in now, the COVID-19 crisis, will leave scars. Such crises always do. Hysteresis. I'm sure you've come across this term already. So that's how economists think about it. Economies are path dependent. If millions of people are unemployed, that affects their employability. If capital isn't invested, then the capital stock is smaller. If tens of thousands of businesses disappear, they're not easily recreated. Yep. So there are scars. But if in addition to that, a lot of businesses that depended on the EU market were deeply integrated into EU supply chains, never get their business back, then they're going to go too. Now, there will be some overlap between the two, of course, but actually on the whole, the businesses hit by losing the markets in the EU are different from the businesses most hit by COVID-19. The COVID-19 businesses, COVID-19 hits most the services that depend on face-to-face contact, and to some degree manufacturing that depends on face-to-face contact. But by and large, this is a service-centered crisis economically. Pubs, restaurants, cinemas, theaters, tourism. Brexit will hit the businesses, often very highly automated, that provide parts for cars and things like that. That's a big part. So it's an additional shock in sectors that are often different from the ones already hit. So I think it will make us cumulatively poorer and our recovery will be weaker. And I suppose the government will say, well, the good thing then is that it will still be a recovery.
Yeah.
See? So they can point to the fact that we're growing. The fact that we're not growing, you don't see what you never see. You don't see counterfactuals. So the fact that we will be growing more slowly than we should have done without Brexit will be invisible and people won't notice. And so they think they will get away with it. But my guess is, from all the evidence and analysis I've seen, is that it will undermine our recovery because I don't think we will be able to find new markets which can conceivably offset the deterioration of our access to these existing European markets, which are far and away our biggest single markets. And of course, the negotiations we will have to have with other important trading partners, above all the US, the most important by far, are going to be very difficult.
Yeah. And you are a journalist, an economic journalist, a financial journalist. And the media generally is an institution whose role is always questioned throughout history. So in that context, there was recently a viral tweet from Lord Sugar that claimed that journalism is missing the mood in the United Kingdom. We, which he meant by the government and the people, need hope optimism and faith, with less negativity and more positive support from journalists. So, as a journalist yourself, what do you feel is the role of the media during the COVID-19 pandemic?
I think that's just about the most ridiculous and stupidest comment you could possibly expect, but I'm not very surprised. The government has already a well-developed propaganda department. It's called communications, government communications, and it is their job to produce propaganda. And of course, in totalitarian countries, it is fully expected that the media should say exactly what the government wants to make the government look good. That's their job. In a liberal democracy, which I used to think we lived in, this is not the job of the media. The media serves the interests of its readers. And if it's any good, we can question which parts of the media are any good at their job and what people read them for, but let's focus on what I do, because it's the only, you're talking to me. Our job is to inform our readers what we think is going on and how they should interpret what's going on. And if things are going badly, then it's our job to say so. Partly because we hope that people make better decisions if they understand the reality, and partly because, of course, we hope that if we don't sugar the pill, people will insist that the authorities improve their performance. Now, the reality in this case, if we're just focusing on Britain, is that this has been, by and large, a pretty dismal crisis for the British authorities. And this can't be sugared. We have, in my view, had tens of thousands of excess deaths. That's pretty serious. I mean, pretending that hasn't happened is grotesque. We have been very badly hit economically, among the worst hit countries in Europe, in terms of expected declines in output this year. We're there with Italy, Spain, and France, are the most badly hit countries in Europe, indeed, really in the developed world. And that's, of course, no doubt because the disease got so out of control. Yeah. And by and large, if you look at the figures across the world, you will see that the countries that have had the largest hit from the disease have also so far had the worst economic effect. That's not terribly surprising. The idea that there was a trade-off in which you could let the pandemic rip and the economy will be better off was always, in my view, completely mad. So we have done badly. It is our job to say so. It is our job to discuss how we can do better. And it is not our job to make the government feel good about itself or even the country feel good about itself. It is our job to point out what's going on, because that really is what a free press should be doing. And in the hope that, as I said, people will be better informed and policy and action will improve. So I think Alan Sugar is confusing us with the Soviet Union.
Thank you very much. And now we'll move on to the personal section of our interview that our viewers might want to hear about. And you've mentioned in the past that you didn't want to become an academic, and we would like to know maybe why is that, and what qualities do you think make a good financial journalist?
I should say, by the way, I'm sure, I don't know what you've been reading on me, but I never wanted to be a financial journalist either. So I had no plan at all to end up where I am. It was a complete accident. And well, from my point of view, a complete accident. It happened when I was already over 40. So my career as a journalist was unplanned, and I think it's pretty unique. There are some other writers who got into column writing later in their careers, But the one who's most obviously falls in that category was a very, very great academic economist who won the Nobel Prize, Paul Krugman. So it was a good friend, but his career is also completely different from that of most financial or economic journalists. So I never planned to become a financial journalist. The reason I decided not to be an academic, well, there were probably three elements in it. The point at which I was making this decision, which is now pretty well half a century ago, I was at Oxford, where I was an undergraduate and then a postgraduate at Nuffield. I did what's now called the MPhil in economics. And I was thinking, should I do a doctorate and go on? And I had been offered a temporary position as a lecturer at one of the colleges, Merton, in fact. And I would have done a doctorate. But there were probably three reasons. First, I was already married, and my wife I married very young. We met each other very, very young. We're still together. So you can work out how long we've been married. We met at Oxford, and my wife had been at school in Oxford, and she really wanted to get out and go to London. Well, that was important, or go somewhere else, it turns out. Second, I thought very hard about, there's much about intellectual life I enjoy because I'm a very intellectual columnist, obviously, and the FT is not the Sun. So, but I thought I did think even then that I have some real academic intellectual abilities, some moderately unusual intellectual abilities, but I've never thought I would be an original and creative thinker at the frontier. Therefore, I thought I would never be anything more than a second-rate or third-rate academic, and I didn't feel that was very attractive. Now, I've had the great pleasure in my life to know a lot of really, really remarkable economists, and that judgment of mine was completely correct. I mean, it's clear to me then and now that that's not what, and I didn't want to be a second-rate academic. Then the third thing is that, by and large, if you're going to research as an academic, you're going to have, unless you're a Joe Stiglitz, a bona fide sort of genius, and Joe is, I think, in the sheer variety of frontier work he's done. But by and large, you have to specialize. Yep. You have to work in a specific area. My intellectual temperament is against this. I mean, what I'm good at is putting pieces together across a very wide field, well beyond economics, let alone economics. And I thought that just working in one small area for much of my life, and I've known actually some remarkable people who've done wonderfully with that and actually broke out of it. My friend Paul Collier at Oxford is an example, but yeah. I knew I didn't think I could do that. So for those three reasons, I decided I didn't want to be an academic. And then there was a bit of luck in it, chance. So I thought, well, let's apply for some interesting jobs and see what happens. Because I was still thinking I might go on and do this doctorate. But I looked at the Bank of England. That didn't seem very attractive then. It would be more attractive now. But then somebody I got to know very well, I didn't know him then, a former Oxford fellow, was a department director at the Bank of England, at the World Bank. The World Bank interested me a lot. Yep. Development interested. I'd been taught at Oxford by top-class development economists like Ian Little and Jim Merlees, and I thought development is a really important issue. It's the biggest thing going. I thought in economics, it's the biggest thing going on in the world. This is sort of 1970. So let's apply for the World Bank. And I did, and I never expected to be accepted. They took very few people, and for very obvious reasons, they'd already had a lot of Americans and British people. So we tried to stop that and to take people from other countries completely legitimately, but I was accepted. So I couldn't possibly say no. I persuaded my wife to go to Washington. I spent 10 years there. And that was really the seminal thing. Everything else followed from that. I love being at the bank in many ways. I also find it very frustrating. I've written about that, but it changed me. And once you've been 10 years at something like that, you're not going to go back to academia. It's too late. You're not. And I love being directly engaged with really top class, interesting policy questions.
Yeah.
So I worked for some years on India in the mid 70s, and that was incredibly important to me in what interested me. So I then went to work on trade policy, and then completely out of the blue, I got more and more interested in writing for the daily press. I'm interested in politics. It's why I got into economics in the first place, is because I'm interested in politics. I'm not a mathematician by background, very different background. Then completely out of the blue, a friend of mine who was then the editor of the FT, long since retired, said, would you like to come and write for the FT? And at that stage, the think tank I was working for was running out of money, as British think tanks tend to, unlike American ones. And I just couldn't think of anything more fun. The alternative would have been to go back to the World Bank, to go into the city as an economist. And then I've never really been interested in making lots of money. I thought the FT is a great institution. This would be a tremendous opportunity, and it would use my interests and skills and knowledge and my ability to write and explain things. So I said, well, okay, let's try it. My whole life is a series of accidents, and I tend to think that's a good way for life to evolve. You can't have a plan because the world is too unsettled. And so that's how I fell into journalism, and I found that I really rather loved it. So that's the end of the story.
Thank you so much for that. And obviously, like you said, you've had a huge experience writing articles and columns for the Financial Times, and I'm pretty sure written a lot of things before that. So in your career, is there any article or column you wrote that you're particularly proud of, and why?
There are quite a few, actually. And first of all, I tend to forget my columns. Consciously, deliberately. Because I don't want to be burdened by my past. I don't want to feel that it's my job to defend opinions that I had in the past which were wrong or no longer relevant. In April 2016, so this is long before the presidential election, I wrote a piece which was rather provocatively titled, Donald Trump is How Great Republics Meet Their End. And it had two suppositions. First, I thought that Donald Trump was quite likely to win the presidential election. In April 2016, very few people thought that. They weren't even certain then that he was going to win the nomination. That was pretty plausible. But I was one of the earliest to realize that he would win the nomination, not because of my genius, as it were, because a friend of mine had told me that. But I also thought that he would be profoundly corrosive of the rule of law, of core American institutions, and that the American constitutional order was quite vulnerable to this. Right. I think what's happened since suggests that's broadly correct. Yep. And my view is that if he wins again, the constitutional order might not recover. It certainly will be very, very badly damaged. I write on a very broad canvas. My biggest mistake by far was not realizing until early August 2007 that the financial crisis would be as bad as it was going to be. I thought we would survive it. It would be damaging. It was clear that the trends were unsustainable, but I didn't realize that the financial sector of the West would implode completely. And that was a very important mistake. I was in pretty good company. But yeah, I've learned from that.
Thank you so much for that, for sharing your experiences. And like you did talk about the past, and we can move on to our signature thought experiment, which is a part of the series. And this also deals with time in its different way. So the question is that if you could travel back in time and cover any event from the past, what would you want to write about and why?
Wow, that's an interesting one. Any event from the past.
Anything.
I suppose being a colonist, given what subsequently happened, I would like to go back to 1930 in America. And I would like to try, I would fail, of course, to persuade the Americans that if they allowed what was then unfolding to unfold, a calamity would ensue across the world, leading to the Second World War. So my own family, obviously I was not born then, but my own family was very much affected by this. They were continental Jews. And while my parents and their immediate family survived, all their wider families were murdered without exception. So, and 55 million people roughly died in the Second World War. It devastated the world. And that was, in my view, the product of essentially economic policy mistakes, not just. And of course, the man who wrote most about those mistakes, going back to the Versailles Treaty, was Keynes. Yeah. Now, he was the greatest economic journalist of the 20th century. So my writing at this putative time will be redundant because he said most of what I would want to say, but he didn't do it every week. I would like to have tried to persuade people that what was happening would lead to an unmitigated catastrophe. That, to me, this is a personal thing because it's personal and because it's political. Perhaps more than anything, I've said this many times before, I think it was about that got me into journalism, in the sense that I came to the view quite early in my life that economics is the bedrock of politics in the modern world. For very obvious reasons, the people of our world expect prosperity. They expect to become better off. They expect economic security in a way that our ancestors 300 or 400 years ago would never have imagined. It was inconceivable. And it's now, of course, become true of the whole world, which is a very good thing. But if you don't provide that security and stability and prosperity, then the political systems that we now have will collapse, disintegrate completely into quasi-civil war. You might get a Nazi or who knows what. So to me, that was a very powerful motivation for getting into economics. And it remains a powerful motivation today in this pandemic crisis to try and argue as best I can, as we can, for dealing with this. So, for example, why I supported massively, strongly, indeed, I called for it right at the beginning of this in March for the sort of package that Rishi Sunak has put in place, which is the good thing that the British government has done. And the world, we're not making the mistake we made in 1930 now. We're not making the mistake we made even in 2009 and 10 now. We are actually spending the money as we should. So and if we didn't, this would be an unimaginable catastrophe. Just imagine if every government said we've got to balance our budget now, as they did in the early 30s. We would now be on the way to a total wipeout of our economies, and with unimaginable political consequences and social consequences. So we've learned something, and so it would be nice to have played a small part in preventing that from happening.
It's true, and thank you very much for this interesting answer. And now we'll move on to the last part of our interview, which is a question from the audience, and this one comes from Ed Collins. So thank you, Ed, for submitting your question. And Ed asks, do you see or predict any positives in the world that the outbreak of COVID-19 is creating?
That's a very good question. So there are two potential positives. I don't think they're actual, that I can think of.
Right.
And they're very far from actual, because it could go the opposite way. But one potential is to realize, because it has been brought home to us, that we humans face very important common threats, which are global. The pandemic is a global threat. As you probably realize, if you look at the maps, it is now everywhere, basically, and it threatens everywhere. So it's a shared threat. It's, of course, not the only one. I mean, climate change is another one. Now, the threat has tended to divide us, but it could, in principle, and if we're wise, it might lead people to say, okay, we have real divisions amongst ourselves. We don't like one another in important ways. Look at the West and China, but we have common threats, and we really got to deal with them powerfully together. So one possible positive is, as we go through this, to accept that there are challenges which nations, even the most powerful nations, cannot deal with on their own. We can only deal with together. So if we get a vaccine, please God we do, we have to make sure that everybody gets it. And the second aspect is more national. I think the virus has laid bare in powerful ways some very painful inequalities within our societies, with the more vulnerable people bearing much of the pain. Okay. I am really pretty safe. I can work at home. I live at home. My work continues. I don't lose my job because we can continue like this. And I think we've been very starkly aware of this. Now, I'm not a radical egalitarian, but it seems to me very, very clear that after this crisis, and during and after this crisis, we have to remedy some of the more extreme inequalities that have evolved in our societies, simply to make them more decent places. And this obviously applies to health, living conditions, housing, incomes, education. So I think if you've shared a common threat in this way, societies ought to be pulled together, as they were actually in the war. I wasn't alive, but my parents talked to me about that. So if there is a positive thing to come out of such a shocking shared experience, it will be that we try to do things better together within society and across the world. And to some significant degree, at least in the West, that happened after the Second World War, though, of course, the world was divided between the two power blocs, and as the world is now being divided between the US and to some degree the West as a whole and China. So I don't know how this will play out. It could play out very badly, but there are lessons here to be learned, and it would be a very good thing if we learn them. And I'm trying so far as I can in my own writing to argue for this, and you in your generation, who will have the whole future in front of you, should, and this will be a seminal experience for you, I would guess. You know, the first really, I imagine you're all too young really to remember the global financial crisis. Were you about 10 at the time or something like that? And so you were a child. So this is your first common, powerful experience. And there's a lot to be learned from this experience about the nature of the world and how to make it a better world. And that's the great challenge for each generation of people fortunate enough, as you are, as I was, to be privileged by an excellent education and living in security and stability.